Hello and welcome to the RICS World Built Environment Forum webinar series. My name is Chris Alder. I'm a lawyer and the senior executive at RICS, responsible for professional standards and regulation for all our professional members operating globally within the built environment. Today's webinar, the World Built Environment Forum, is partnering with the World Economic Forum and the Partnering Against Corruption initiative. In the webinar, we're going to be discussing and conversing about business integrity in real estate and tackling illicit financial flows. The UN estimates that as much as $1.6 trillion each year, 2.7% of global GDP, is lost to money laundering. And beyond the economic damage that's associated with the loss of financial resources for social programs and infrastructure development, cross-border transfers of funds derived from corruption and other illegal activities severely impact society. That impact is evident in weakened trust in professional and public institutions, reduced regulatory certainty, and unsafe or poor quality infrastructure, leading to disastrous outcomes for human lives. The World Economic Forum's Partnering Against Corruption initiative unites real estate stakeholders and experts in a new initiative designed to equip professionals with the tools and best practices to effectively counter illicit financial flows. And I'm delighted that the panel that are helping to provide real technical expertise for this webinar are with us today. So if I could just briefly introduce the panel that you will be hearing from. Firstly, if I could introduce, please, Jonathan Drimmer, Delia Ferreira Rubio, Claire Hadley, and Houssam Wazzan from World Economic Forum. If I could hand over first to Jonathan, if you could just briefly introduce yourself to the webinar.
Sure. I'm Jonathan Drimmer. I'm a partner law firm in Washington, D.C., Paul Hastings, LLP. My practice focuses on cross-border issues, concerns, investigations, including around responsible business conduct. I've worked on issues associated with anti-corruption, with illicit finance, and other related topics for more than 20 years. And very pleased to be here, and thanks for having me on.
Thank you, John. Delia.
Hello, connecting here from Buenos Aires, Argentina. I am a member of the World Economic Forum Global Future on Good Governance. I am a lawyer, and I have been the chair of Transparency International for 2 periods till last November. My field is anti-corruption, of course, and integrity.
Yeah, thank you, and welcome to the session. If I could hand over to Claire, if you could briefly introduce yourself, Claire.
Hi everyone, and thank you for inviting me today. My name's Claire Handley. I'm the Chief Ethics and Compliance Officer for JLL. So I manage our corporate ethics and compliance program, including anti-financial crime. I'm also a lawyer. I started life way too long ago, nearly 30 years ago, in real estate, and I've been with JLL for over 10 years now. Thank you.
Thank you, Claire. And Houssam, if I could hand over to you, please, for a brief introduction.
Hi, everyone. Hello from Geneva. Thank you, Chris, also for the invitation to this panel today, and a warm welcome to the audience. My name is Houssam Wazzan, and I lead the World Economic Forum's Partnering Against Corruption initiative, PACI, or PACI for short. Background is in economics and political science, and prior to joining the forum, I worked in several international organizations, primarily in ethics and compliance, developing integrity frameworks with an emphasis on policy creation, whistleblowing systems, incident management, training and awareness. And at the moment, working since the past 5 years at the forum with PACI, and happy to give you in a moment a bit of overview what we do specifically and how do we relate to this topic today. Thank you.
Thank you, Houssam, and thank you to all of you on the panel in anticipation of a really rich and highly expert discussion through the course of the webinar. So thank you so much for your time. We've had over 200 registrations for the webinar today from across 40 countries, and I think as well the breadth of those various geographical spreads is also joined on through the panelists today. We have a number of questions that we will be posing to your panel, but similarly, to ensure that we really get to understand questions from the registrants to the webinar, those that have joined online, you'll see that on your screen there is an ability for you to submit questions to the panel. I will do my best as the moderator of the panel to be able to make the time to share as many of those questions as possible with the panel to really broaden and deepen the depth of conversation available. So without any further ado, if I could turn to the first question, please, and Houssam, if I could ask you to talk to this first question around your definition. How do you define illicit financial flows? What methods are most commonly used to target actually the real estate sector?
Of course. Just to also quickly, before diving into the topic, give a bit of overview. What is the Partnering Against Corruption Initiative? Since you referenced it, Chris, in your introduction. PACI is a global platform that is dedicated to fighting corruption and promoting transparency. It was founded over 20 years ago with the World Economic Forum, bringing together leaders from business, from civil society, international organizations, and academics, in some cases governments as well, and focuses on collective action, upholding integrity standards, and providing this safe space for stakeholders in order to discuss challenges and risks, share best practices, and drive ethical, transparent business practices worldwide. Now, taking a step back and before also looking at the definition, it really struck me when you mentioned in the introduction of the webinar the estimate from the UN that specifically that up to $1.6 trillion or around 2.7% of the global GDP is lost to money laundering on a yearly basis. It is definitely a staggering sum, which does equate in some cases the economic output of entire countries. So you can see the scale of the challenge that we face with illicit financial flows. And when these funds infiltrate the real estate sector, they distort markets, they deter foreign investment, and ultimately they do impact society by eroding this trust in public and private institutions together. Now, at the core of this definition, illicit financial flows generally refer to this cross-border movement of money obtained illegally, whether through corruption, fraud, tax evasion, or organized crime. And it's not only harming economies. Beyond that, they do drive inequality. They also drive further corruption. And why are we discussing this today? And specifically in relation to our audience, I think we're joined mostly by experts, industry experts from the built environment sectors, real estate industry specifically on this topic. I mean, real estate is vulnerable, especially to illicit financial flows due to the high value of transactions and the complex ownership structures. The tactics vary a lot between using shell companies, layering transactions, and sometimes it's also exploiting gaps in beneficial ownership transparency, which is a whole other challenge and topic, which enables ultimately illicit actors to move those funds undetected. So inconsistent transparency measures make it challenging for regulators ideally to trace these funds, and that allows criminals to conceal assets effectively. The impact that we mentioned previously, it's not only the impact on the economy and the financial cost of that, which you can put an estimate, but it goes beyond that. Illicit financial flows can also contribute to environmental damage, to social inequities, from unsafe developments to the misallocation of resources meant for sustainable growth. And addressing them is therefore not just about compliance, not just about complying with a set of rules and regulations or laws, It's really about also building a resilient and equitable future, whether you're talking about the real estate sector or the society as a whole. Before I close and hand back over to you, Chris, I wanted to also note that, with this challenge and given the nature of this challenge, that it's transcending borders and sectors, there is no single entity that can tackle alone on its own fighting illicit financial flows more specifically. It really requires a coordinated effort that brings together governments, businesses, international bodies, industry bodies like the Royal Institute for Chartered Surveyors that you represent. And only through this kind of collective action, through the shared knowledge, proactive safeguards, a collective commitment between all of these different stakeholders, we can then actually strengthen integrity in the real estate industry, protecting markets and ultimately fostering a more sustainable future. Thank you, Chris, and over back to you.
No, thank you, Houssam. It's incredibly interesting and a great scene set, and also pointing out a number of the real vulnerabilities facing the real estate sector. Coming into the second, sorry, Delia.
Yeah, may I add that we are talking about the real estate as one of the gatekeepers that protect the whole system from these illicit activities, the criminal actors or the corrupt actors. And the problem with gatekeepers, and real estate agents are one of them, together with lawyers, accountants, notaries, etc., is that if they are not performing well the gatekeeping work, they become enablers of the cycle of corruption, which I call the she cycle, nothing to do with the feminist idea, but the she cycle is to steal, to hide, and to enjoy. And gatekeepers help in different functions and different roles these three moments of the cycle. Particularly, real estate performed a hiding possibility to park wealth, protect it from enforcement authorities, and also to enjoy the proceeds of corruption. That's or illicit activities. That's why we talked about gatekeepers and try to avoid them becoming enablers of illicit financial flows or criminal activities.
Thank you, Delia. And I think it's a point I'm really keen that we come back to or touch on again during this webinar, and the ability of those gatekeepers and professional communities to work much more closely together to provide a response to the challenges. If I could come on to the second section, the second question, and perhaps Delia, if you want to unpack that a little bit further in terms of, from your perspective, what are the most pressing challenges that real estate faces in tackling illicit financial flows? We talk about the vulnerability. What are the challenges really facing real estate in being able to tackle those illicit financial flows, in your view?
Well, in fact, Houssam make a good picture of the situation and the vulnerability of the sector. It has the challenges comes from lack of information, lack of risk awareness, lack of training. In some cases, in the real estate, the problem is that it's small companies that cannot afford a big compliance system within the company. In some cases, it has to do with the lack of access to the appropriate information in order to find out who are the owners, what kind of businesses are involved in the situation. Particular challenges come from the fact of many of the actors being foreign actors, which complicate the access to information by the agents. And also, I think we have to think, normally we focus this on the buyers that approach the agents in order to put money or illicit money in this business. But we have also to think about the challenges that the seller can bring, because this can be a chain of different illicit actors. So the vulnerabilities come from many different positions, even the most simple one. You have to train your staff to have a culture of asking the questions and checking the responses, not just relying on the client's information. So know your clients is much more than asking your clients what he or she wants you to know, and particularly complicated if you have a corporate vehicle used to perform the business. So it's a very huge amount of entry points, I would say.
Thank you, Delia. It's fascinating. Claire, if I could come to you, I mean, obviously with the position you hold within JLL, a huge global corporation working in a range of professional services areas, certainly within real estate, what's your perspective on those real challenges?
I mean, as Houssam and Delia have just talked about, you know, what we're talking about here is a sort of multi-billion-dollar crime at the end of the day, and people invest. So when Delia talks about that lack of transparency, it can be really challenging because real estate allows corrupt actors basically to invest and park their wealth covertly, you know. So we're always looking at those challenges because people go to great lengths to obscure beneficial ownership, and in some countries it's a lot easier to trace back. You know, hopefully some of the you know, the changes being brought into the UK with ECTA are going to make it easier for real estate companies to identify the beneficial owner, the source of wealth, the source of funds. But in many jurisdictions that can be really difficult, and as Delia said, you know, often if you're dealing with a foreign investor, it's really difficult, and having the knowledge and the trained staff requires a lot of investment, and that can be difficult as well. I mean, one of the other things that we face is that the real estate sector isn't regulated consistently across all the jurisdictions, and that makes it very difficult if you're trying to design consistent standards that you're rolling out to all of your people. If those consistent standards are not required in certain countries, it's very, very difficult for our people to demand anti-money laundering information when, you know, the environment, the market isn't expecting that question to be asked. So, you know, when I think about where JLL is today, you know, two of our major markets, obviously the US and Australia, real estate brokers don't have to perform money laundering checks. So there are gatekeepers, but there's no regulatory requirement for them to perform those checks, which makes it very difficult to go to a client to request that information to the level and depth that you would want and expect. So that inconsistency, I think, makes it really hard for international real estate firms to kind of implement that standardized compliance program across all the borders. And we also see varying levels of, you know, of the approach of enforcement agencies as well. And, you know, again, when you're trying to get your message across to your employees about why this is important, in some jurisdictions, the view of the risk is seen in a very different way as well. So communication and learning and how you sort of put your message across, you know, is really important. But I think that is a major challenge, Chris, across the board.
Thank you, Claire. I'm thinking, I suppose, about that need for skills, education, awareness. Jonathan, I wonder if I could come to you, and I'm conscious we've got another question in this sort of arena. I mean, from your perspective, what do you see as the key red flags, warning signs, potentially, that professionals should be aware of in identifying potential illicit financial flows. We see the vulnerabilities and the challenges. What are the key signs that you believe we should be helping professionals to understand and be aware of?
Yeah, I mean, I think there are quite a few. It's a great question, because I think there are quite a few. And look, part of the challenge that we do have from our side of the fence, those on this call, is that, you know, every time we see a red flag and every time we put in a process ultimately designed to address it, you know, people are creative and incentivized to figure out ways around it. And so we certainly can talk about, and I will talk about some of the key red flags, but I think the most important aspect of all of this is vigilance and continued efforts to try to identify and stay one step ahead of what people are doing. But look, lack of beneficial ownership is really the single most reddest of red flags. I mean, I think when you really aren't able to figure out and understand, even after reasonable diligence, who the true owners are, that's a pretty good sign that something's going on. I mean, obviously, we see complex and hidden ownership structures, shell companies, things routed through jurisdictions that are noted for having opaque laws and lack of regulation. All of these things are obviously relevant when you see significant movements in cash or funneling things from coming to or from several different accounts that are then ultimately aggregated or distributed. Typical AML risks in terms of structuring is one that we also need to pay attention to. You know, I would also say that in my own experience, looking at some of the financial action task force, the FATF gray lists and blacklists is worthwhile as well. And in addition to some of the traditional shell companies running through well-known jurisdictions. Unexplained wealth is yet another one that we need to pay attention to. And so look, again, I think we can go through and talk about all of these different kinds of red flags, but to me, again, the biggest point, and I'll come back to it, is just every time you put into place measures that are designed to detect these things, you know, criminals and others are looking for ways to get around them. And so being attentive and vigilant and applying resources when these red flags do come up, these are going to be really important steps in any kind of programmatic effort.
And if I may, PEPs, political exposed persons, are another red flag. And it is not so difficult to detect this kind of persons involved in the business, because you have to read the newspapers or social media to get the picture of some political exposed persons beyond the legal definition or some legal lists of political exposed persons. The indexes of corruption can also help. We receive at Transparency International many questions regarding why is this country ranked like that in terms of corruption. So if you are receiving money coming from politicians in those countries, please keep your eyes open. That can be a red flag, a practical red flag. And I was reading the other day a last report made by Transparency International France, which detect a very simple thing that has to do with the local regulation. And Claire, you mentioned that's an important problem, not only in terms of anti-money laundering, but also the civil regulation of purchasing. And for instance, you know that 72% of the parcels of real estate in the region of Paris, 72%, have been purchased with an fictitious registered identification of the company, 72. And all these numbers that has been recorded by the notaries and had been managed by the agents, the real estate agents, include a letter at the beginning which indicates that it is a false number. Nevertheless, the transactions took place, and these are the owners of the parcels. And the parcels in France, because of local regulation, can involve more than one property. So it's just a simple thing. Check the number of the unique identifier of a company that you are working with.
And that's a really helpful and I wonder, Jonathan, if you've got any kind of insights into whether there might be any proactive type steps which firms may be able to take to be able to respond to what's sounding like almost an arms race between a very highly sophisticated series of potential fraudulent activities and firms, practices, businesses, professional communities trying to keep pace with increasing sophistication. Are there any proactive steps do you believe that could be taken or implemented? I'm sort of struck by the point, Delia, you were making in terms of, yes, analysing some of the information. Is there anything further that you think firms might be able to do?
No. I know we're going to talk about technology in a second, but look, I think that putting that to the side, Delia is 100% right that, digging into questions around PEPs and again, verifying identities and verifying information that are associated with corporate entities, like these are just critically important and basic points that people often don't do. One of the things, though, by the way, when we think about proactive, as Delia was talking, I was thinking about why the Panama Papers disclosures were so groundbreaking. And of course, these were the journalistic leaks that come from identification of how offshore funds and the movement of funds was ultimately being structured. And yeah, part of it certainly was the individuals and the political officials and high net worth individuals who were involved. But to me, and from, again, to your question, Chris, from the proactive standpoint, studying the methodology that ultimately went into how money was being hidden and transferred is a really good, like, 101 for anybody who is looking to put into place compliance processes that are designed to identify and address illicit movement of money. But look, programmatic activities, I am a huge believer in any kind of a company that taking steps that focus on a systematic, program-oriented approach are going to be critical. Policies, procedures, trainings, governance, audit, assurance, all of these basic steps. Here again, due diligence is the name of the game, and thinking proactively and creatively and actively looking at what materials you can gather and studying them for the kinds of red flags like fake company numbers that Delia is talking about it is nuts and bolts, and that is the approach that really is going to end up being most effective most of the time.
Other red flag that is simple is the mass address that many companies use. In some countries, we have more than 2.5 thousand companies that register the same address. Okay, if you have a client register an address and you go there and you have 1,000 companies there, well, that's a red flag. Probably is a good, in good faith and everything, but that's a single point that you should take into account as a red flag. And it is simple. You have to go to the register, just that.
And I think to that point, so you have common addresses, you have common directors, you have common officers. When you do start to see the same people in the same places appear over and over and over again on documents, that should be a clear sign that you need to ask more questions. Might be fine, but when you start seeing repeat information of any kind, including addresses, absolutely one of the red flags you ought to pay attention to.
And from my perspective, I may as well build on that in terms of the ability for law enforcement or professional regulators, for example, to be able to share that intelligence. So where a red flag may be identified in one part of the sector, community, practice area, to be able to share that regulatory intelligence, to be able to inform others, to be able to respond as well, feels as well a way in which the gatekeepers could be working much more closely together as a preventative, preemptive type model as well. I've been asked in the background to just remind members of the audience that if there are any questions that you have, please do submit them into the chat function. Now really is your opportunity to ask questions of this highly esteemed panel with real expertise to share with you. So please do ask those questions online. Jonathan, you touched on the word technology. Technology is often, and certainly artificial intelligence is often used as a sort of panacea for many things. I wonder though, if I could come to you, Claire, to ask for your perspectives on how current technology might be helping the real estate sector to mitigate, if it can, the risk of illicit financial flows?
Yeah, sure, absolutely. And we are literally about to launch an RFP to find a new screening tool. So that's quite a timely question. You know, and certainly, I mean, if we look at the technology that's available to help companies manage these risks and to do the in-depth due diligence, there are multiple screening platforms and technology solutions in the market. And the capabilities and quality of what they can do has really improved, especially in recent years through use of AI capabilities. You know, however, these platforms, they do require a significant investment, both in terms of initial implementation and the ongoing costs, which for smaller firms, you know, that can also, we have to recognize, be a challenge. It's time, it's resources to ensure that any solution you find, nothing is ever just plug in and play, although everyone sells it like that. You know, there's always that tailoring to make sure it meets the specific firm's risk profile and their onboarding processes and transactional flows. And so that can be challenging. It's easier for the larger firms to invest in more comprehensive systems and tools. But without these, the whole process of due diligence and onboarding can be very manual. It does require a lot of training for the people carrying out those. You're going to multiple different sources. You're trying to find PEP lists because governments don't produce those. They're all proprietary. So you're trying to identify all those different pieces. It's very manual, and in some markets, you know, the sort of assistance that you get from your client can vary depending on the level of the level of regulation, client and market expectations, etc. So, you know, I do think, you know, it can sound quite easy, but I think it is really quite challenging for firms to do this properly, because, you know, as we've talked about before, people go to great lengths to hide, you know, when you're up to no good, you're not doing it in plain sight. You can ask my children that, you know, they will tell you that. You know, Jonathan just raised an interesting point, and Delia, around trying to sort of map other red flags. And so there is opportunities to sort of use other systems, whether it's sort of CRMs or whether it's your invoicing systems, etc., to try to identify some of those red flags, like, you know, same address, you know, or those other patterns which can be red flags, and that doesn't need the expensive investment in those solutions, and those are things that we can also, I think it's worth firms exploring and looking at. How can we pull reports that identify where you've got multiple tenants all with the same address, you know, or whatever it is. There's certain red flags that you can try and pick out there. But yeah, I wouldn't want to underplay the sort of benefit of having a good due diligence technology solution, because at the end of the day, everyone's trying to move forward. It's a competitive market, and you need your due diligence process to keep up with your deal flow. Otherwise, you know, this whole thing becomes, you know, a blocker. It irritates the clients. It's not a good experience for your brokers, you know, the agents working on it. Is not good for the client either. So I do think that investment can be really helpful, but I do recognize it's a big challenge to invest in that, both in time and the people to get those tools right.
I think from what I'm hearing as well, when you describe screening processes and reactive due diligence that's following a deal flow, they sound to be quite reactive technologies at the moment. Do you see any technologies evolving that would allow machine learning or even AI to be able to predict what future threats might start to look like? Are you seeing those evolving trends in technology available in the market?
We're certainly, you know, having the opportunity to start our screening process a lot earlier, just because with the tools that we have, we're not needing to go to the client. We can do those, we can start the whole process, leveraging the data and the information that we can find. AI is definitely helping speed things through as well. It might not always sort of create the sort of quality, and quite often it can, you know, if the settings aren't right, it can produce a lot more, you know, false positives, which also take time to sort of wade through. But certainly we're seeing that we can start processes sooner than we would like, so we're not, it isn't as reactive. And also from a multinational experience, we are much more centralized now, so we're learning from experiences in one country about connections with the same client that might also be looking to do business in another country, and so we are getting ahead of things in that way. But I would love to hear if anyone has, you know, any other tips or suggestions for how to become more proactive and get further ahead of these things.
I think you are very right, Claire, in this last point. Apart from the big data analysis that can be done with these screen tools, this last point you mentioned of the connection in this case of multi-country companies, because a small retail real estate agent cannot afford that. But big companies can use this technology to share information. And also some professional associations could use the technology to create databases that can be shared by all the professionals in the country, for instance, or in the region, to share the information. In terms of prediction, the only warning I would share with you is don't delegate the decisions on the algorithms, because of the false positives or hallucinations or really errors, because the key issue here is data, the data used to train the algorithms. So companies, for instance, can use the technology to create their own data from their own check data, the databases from their own data that has been checked by the company. So you have really a strong database to use for prediction in many countries or whatever. But you have the possibility to check how are you training the algorithms. And you need a human at the end in order to make the decision. That would be my support. And of course, as we have been talking with Houssam in the World Economic Forum, you need a proper governance for these kinds of tools. So incorporate AI is important with the appropriate governance structures and systems.
Absolutely.
It's such an important point. There's a question that's coming from a member in the audience who is a money laundering reporting officer for a commercial agency in Europe and the UK. It says, Nigel says, we conduct AML checks to satisfy UK, EU regulations, obviously figuring BOs and completing customer due diligence on them. We have an extensive knowledge and experience of red flags, run comprehensive AML training program. I'm going to invite it as a question, Delia, if you could have some thoughts or share some thoughts to, I think it's a question, ultimately, how can we know with confidence if funds are clean or dirty on a transaction? Any initial thoughts or observations?
I think if you performed your compliance duties and you fulfill your standards, you can trust in your systems, but that's not reassuring of no mistakes at all. In fact, I will give you another data. In this year, Transparency International ran a research on 78 corruption cases in Africa. Money from Africa lost to corruption going to the Western world. And in terms of real estate, 80% of the cases involve a real estate agents in UK and US. And this colleague is from UK performing everything. Nevertheless, from these known cases of corruption, UK was one of the main countries where gatekeepers knowingly or unknowingly became part of the illicit financial flows and the corrupt circle. So you have to perform appropriately. If in your country you have legal liability for or liability for legal entities in cases of corruption, probably performing well will be a safeguard for the company. But there is no absolute assurance that you will not be cheated or involved in something.
Such an interesting point and challenge. Something knowing the UK regulations market in this arena, it's not often a most overly regulated sector that will answer all of the questions. There are a whole range of different activities, tools, professional entities, professional bodies and regulators. Again, we keep coming back to this point of gatekeepers working together to bring a level of professional skepticism about transactions to be able to drive then as well the right behaviors to ultimately be confident with the funds of the transaction coming through a firm. But no one single bullet, as the phrase goes, to be able to answer this such challenging question. Jonathan, would you mind if I come to you in terms of what we have as question 5? And thank you, Nigel, for the question. From question 5, could you just really elaborate on the repercussions for firms operating within real estate sector that might be inadvertently caught up in illicit financial flows?
Yeah, no, of course. Happy to do it. When we think about repercussions, and I will talk tangibly about some of the fallout, I don't want it to be lost that one of the repercussions is that you're participating in something that is really harmful and bad societally, right? You are connected to corruption schemes or trafficking of people or arms or drugs, other major societal ills, and I don't think anybody responsibly wants to be part of the problem. You want to be part of the solution, if anything. So I don't want to let it be lost that, you know, if even inadvertently you might be contributing to or participating in or connected to really bad things. In terms of tangibly, which I think is where you were going with this, Chris. I mean, look, obviously you can get prosecuted, right? Like there are criminal investigations and regulatory investigations of individuals and entities that are connected to illegal financial flows, particularly if you have any kind of a connection to a financial institution and are subject to those types of regulations. If you have knowledge or if you should have had knowledge as an individual, as a board member, you can also face liability yourself individually, so company liability as well as individual liability, depending on level of knowledge and level of participation, etc. If you are in or connected to a public company, you obviously can face securities related issues as well, and that can be both painful in terms of your own reputation as well as financially, of course, connected to any fine. And in an era where we increasingly have regulatory actions that are being legislated, responsible business conducts that are being legislated, you obviously will have supervisory authorities that are conducting investigations and issuing penalties that are associated with involvement in irresponsible business conduct. Aside from the legal side of it, obviously huge reputational impacts being connected to any kind of a scandal that involves the illegal flow of funds is one that, again, is harmful to your company, it's harmful to your brand, it's harmful to you as individuals who are associated with it, even if you're not directly connected yourself on an individual basis. It has huge commercial and operational impacts also. Who's going to contract and do business with you in the future is going to be impacted. We're increasingly seeing due diligence questionnaires get deeper and deeper into issues around know your customer and financial connection to bad things like this. So look, if you get caught up in a scandal, not only are you going to have to be answering due diligence questionnaires explaining what happened until the end of time, but look, it is going to take you a long time to dig out from that hole in terms of folks who ultimately want to do business with you. And the last one I'm going to mention is it's really bad for recruiting, right? Like nobody wants to actually go work for, a company that is directly connected to these kinds of scandals and these kinds of bad things. So hard to get good people, hard to get folks who want to do work with you, hard to recruit board members, hard to get commercial contracts going forward, huge operational impacts, legal risks. Idea here is stay away from it and put into place some of the affirmative measures that we've been talking about on this webinar.
I just think that's such a great way to summarize as well, Jonathan, in terms of stay away from this and put in affirmative action. What a great tagline. We heard from Claire and from Delia earlier in terms of the inconsistency across different jurisdictions in relation to whether it's legislation or approaches in different jurisdictions. Do you have any thoughts, observations about how firms that have operations in multiple jurisdictions might be able to better and manage some of these complexities more effectively?
Yeah, I mean, look, again, I think that the patchwork of regulation that exists globally, and I'll go out on a bit of a limb and say I think there are more places that have an absence of regulation than those that have decent regulation. And so as a company, part of your affirmative compliance processes and programmatic processes are to make up for those gaps. You are the one that is effectively filling in the goals with your own practices in those places where regulation is weak. One of the real mistakes that people make is they think that if they comply with local regulation, that is good enough. Or even sometimes if they comply with the strictest of the international regulations, that's going to be good enough, right? That it's a lowest or highest common denominator. And the truth is, it is that plus, and putting into place the kinds of affirmative measures that are designed to detect and prevent fraudulent activity associated with your business on a global basis through continued education and vigilance and resources and technology, some of the other things we talked about, that has to be done to supplement whatever legislation applies to your business wherever it is you are in operations.
Thank you, John. That's incredibly insightful. Thank you. Incredibly helpful. If I can come on to, we've got one more last question, question 6. I'm going to come over to you, Houssam, if I may. In terms of looking at the role of gatekeepers, we've touched on it a number of times through the webinar. You and I have spoken. I'm passionate about the role that professional bodies globally working together can act as a force for good as gatekeepers. Can you help us just understand from your perspective how the role of those gatekeepers is evolving to be able to counter the risk as best they can of IFFs?
I mean, quite interesting insights from the rest of the panel, and I think we can kind of conclude that gatekeepers include professionals from quite different sectors, from finance, from real estate, law firms, consulting. So they do play this important and pivotal role in preventing illicit financial flows from infiltrating the legitimate system. They're usually positioned at the forefront of this transactional chain. They have the power to identify and obstruct suspicious activities before they take root. So rather than passive intermediaries, we really see them as essential defenders for market integrity. So for instance, if you have, and this was also referenced by Claire first on training, if you have the right trainings in place, the right training for real estate agents, let's say, they can intercept huge sums of money laundering attempts. And lawyers also play an important role as they oversee corporate structures, can usually flag this unusual asset arrangements or shell companies aimed at concealing illegal funds. So in this context, it's important to also note that there's a huge opportunity in collaborative effort and collective action across different sectors. This is what the World Economic Forum's Partnering Against Corruption initiative is based on or founded on, as a collective action to help seek or amplify the impact of this work and harmonize kind of standards, promote knowledge sharing among these global stakeholders. I heard a lot in the panel about the inconsistency of the regulation, which is a big problem. I mean, if you look at the real estate sector and why is it an important sector when you look at this issue? Compared to others, it's probably less regulated. There's gaps between different jurisdictions. Also, the topic on trainings and gaps in knowledge, and also the differences between the size of the firms and how much capacity they have and resources. Building on the mission of PACI, the initiative at the World Economic Forum, we recently launched a new work stream that is named Gatekeepers Advancing Integrity and Transparency, GAIT or GATE. It targets the topic of illicit financial flows, an initial focus and a pilot on the real estate sector, given the reasons that I just mentioned in the panel, also referenced earlier. The aim of this work stream is to provide private sector professionals with the essential tools, best practices, guidance to combat illicit financial flows. And it also encourages this collaboration with industry bodies to shape global standards. Ultimately, it seeks to strengthen those practices, which I think is super important in order to, aside from tackling the issue, this helps build trust with clients, with investors, with partners, and it aligns your illicit financial flows, the fight against illicit financial flows, with your sustainability strategies and sustainability goals. So that reinforces, obviously, the responsible business practices. About a year ago, we convened a group of World Economic Forum partners from the real estate industry. We brought together also other key stakeholders like the industry body of the built environment, RICS, Royal Institute for Chartered Surveyors, which focuses on setting standards in the real estate industry, other experts, in order to discuss what are the key risks and challenges that this sector is facing when it comes to this issue, what solutions we need to devise. And the collaboration at hand is really to position the real estate sector as a leader in integrity, rather as this, sector that everyone thinks of as, oh, you launder your money through real estate. It's important to make anti-illicit financial flows practices foundational to your own sustainable development, goals as well in your company. So to address these specific sector-specific challenges that we discussed, we developed a set of principles in order to counter illicit financial flows within real estate. This provides a comprehensive framework for risk-based approaches and standards implementation. The principles are aimed at guiding real estate professionals in managing these inherent risks, navigating evolving regulatory demands. They have been launched earlier this week on Monday. And the aim is to offer industry-specific strategies to enhance defenses against illicit financial flows. One topic and an idea that came up also in the discussion is this, difference between smaller and bigger firms and capacity, which I think is super important. And we definitely took that into consideration in our planning. So in developing these principles, we did collaborate with small and medium-sized enterprises, specifically from the RICS network, in order to ensure that the framework is accessible and relevant to those companies with varying resources, capacities, given that the realities are different. You can't compare the capacities of the multinationals with the smaller companies who struggle to prioritize what do we need to put first, and other things can become deprioritized as well. So for us, SME engagement was key and still key in creating those practical and scalable solutions. And actually, when you look at this paper, you feel that the principles are applicable to any industry. They are the foundation. So you should put an enterprise risk management program. You should have controls, policies, procedures, training, and awareness raising. However, we also made sure that in each of those principles to try to distinguish the relation with this industry. So for example, in terms of developing an enterprise risk management program, you need to understand that firms that offer brokerage services face heightened exposure to illicit financial flows compared to others. For example, those are maybe in urban planning. So you need to tailor that program specifically in order to focus on enhanced scrutiny on higher risk operations while maintaining compliance and efficiency across several areas at the same time. So just to close, I wanted to mention and flag that, with this work, I feel like with adopting these principles, which are the base, just the foundations of what you should have in place as a small company, as a real estate company in this industry, I think gatekeepers in the sector can establish a strong foundation for effectively mitigating illicit financial flows. And ultimately, this does not only reinforce market integrity, but also contribute to broader and more important goals, more on this level of a more sustainable future. So that's mainly what we've been doing at the forum. And yeah, would love to hear from the other panelists as well.
And thank you so much for that, Houssam, as well, because I think two important takeaways away from me as well is in relation to the principles is about the use of the word practical and relevant, because of course these need to be tools available to a range of firms, sizes and entities. I'm acutely conscious of the time. Before we draw the conversation to a close, I wonder though if I could cheekily ask the expert panelists if you could perhaps provide a couple of key takeaways for our audience that you think are particularly pertinent or relevant from the conversation today. Perhaps unfairly, Claire, if I could start with you to share some of further couple of key takeaways with the audience, that'd be incredibly helpful as a way of closing the conversation.
Thank you. Absolutely. There's been so many great insights on this call. I think Jonathan described brilliantly why no one wants to find themselves embroiled in any of these sort of illicit funding activities. But for me, I think the principles that Houssam has described in the Gatekeepers initiative do give people that toolkit to proactively reduce that risk. It's never going to disappear. We know that. We all take a risk-based approach, and criminals are normally one step ahead. But to have that scalable approach, which is based on those key principles, training to me is one of the things that those lessons learned from across the industry about where our risks fall. That would be sort of my key piece of advice, is to really promote that understanding across the board of why it matters and how it can manifest itself. Thank you.
Thank you, Claire. And Delia, if I could come to you, a couple of succinct key takeaways for the audience.
Very briefly, I would say that no matter how big or small your company is, you have a role to play in the fight against corruption and illicit financial flows. So it's a collective action endeavor to fight corruption for the possibility of a better world with integrity around the globe.
Thank you, Delia. And Jonathan.
Sure. I think one of the real takeaways, it builds off the point that Delia made. We can talk about processes that are designed to address really sophisticated efforts to move money and hide financial flows, but don't forget to do the obvious, right? Often just the basic steps in front of you, checking names, checking addresses, seeing if there's duplication, looking for those basic red flags, that's going to uncover a lot. So don't forget the basic stuff, and if you're intimidated by it, that's the place really to start.
Thank you, Jonathan. Houssam.
I think from my side, one thing we always advocate for with our initiative, it's about integrity beyond compliance. It's not only about, this is what's in the regulation, let's comply with it. It's knowing that we need to sometimes take the extra mile and do the right thing and the thing that we think can help us as much as possible in our company. And given that this industry might have some gaps in regulation, self-regulation is super important. Being open and having collaborations, being part of collective action initiatives is super important to understand what are the best practices, what is the knowledge that I should equip myself with, and just do your best. I think this is super important. Thank you.
Thank you, Sam. Now, on behalf of RICS and the World Built Environment Forum, I just want to extend real, genuine thanks to the panel for sharing your expertise and time, both with us, but also with the audience who have joined and have been incredibly active. Thank you so much for your time and expertise. Incredibly valuable, incredibly insightful. We will be publishing a recording of the webinar, and there'll be a written summary as well available online over the next couple of days. In the short term, thank you so much. For members of the audience, if I could ask you please to take a couple of moments to share your thoughts about today's session. There's an online poll available on your screens that will appear at the end of the webinar. I also want to take the opportunity to share details of future webinars which the World Built Environment Forum will be running. They're on your screen now. As you can imagine, a lot of focus from the RICS in terms of the world of the built environment. I'm determined though to continue working as closely as possible with the World Environment Forum. So Houssam, I'll be on the phone very soon to think of ways that we can help support each other in this incredibly important initiative on illicit financial flows. And also, before we close the webinar, if I could also just add a slot for the Global Sustainability Conference that is a key priority for the work and development of the work of those in the built environment. And details of that Global Sustainability Conference will appear on your screen very soon. In the meantime, thank you so much for your time. Thank you everybody for your contribution and for sharing and for listening to those online and the audience. Thank you very much.